In the humid, cotton-laced fields of Alabama, a young boy named Jim Rogers pedaled down the dusty roads of his small hometown on his bicycle, clutching newspapers under one arm and ambition under the other. Born in 1942, Jim wasn't like the other kids. While they played marbles and chased fireflies, Jim was already building the foundations of a life that would one day defy the conventions of Wall Street. By the age of 5, he was selling peanuts at baseball games. He wasn't just hustling for pocket change, he was studying human behavior, learning supply and demand the hard way. And most importantly, he was learning the value of money, not just how to make it, but how to multiply it. Fast forward 2 decades, and Jim Rogers had swapped the rural calm of Alabama for the stormy chaos of Wall Street. After attending Yale and then Oxford as a Rhodes Scholar, he landed a job on Wall Street in the late 1960s. While most men in suits were content with clocking in and out, Jim was hungry for more. He wasn't dazzled by the skyscrapers or seduced by the status. He was there to win, and he knew he had a weapon few others wielded: common sense. It was in 1970 that Jim met another ambitious investor, a man named George Soros. The two were like oil and vinegar in personality, but dynamite in results. Together, they founded the Quantum Fund, a hedge fund that would become legendary in the financial world. They were rebels with calculators. Instead of playing by the rules, they made their own. While others invested domestically, they looked overseas. While others followed trends, they predicted them. Over the next decade, the Quantum Fund grew by an astonishing 4,200%. That's not a typo, 4,200%. In a time before the internet, before global interconnectedness, Jim and George were already reading international newspapers, flying to far-off countries, and assessing opportunities where others saw risk. Jim Rogers became known not just as a successful investor, but as a global thinker, someone who could connect the dots between politics, culture, economics, and market cycles. Yet, even as the money poured in, something was off. While Soros relished the role of puppet master behind market movements, Jim found himself drifting philosophically and spiritually from the cutthroat world they helped shape. He had a burning question in his mind: is this all there is? To the outside world, he had everything: money, influence, and a front-row seat in one of the most powerful financial empires ever created. But to Jim, it felt like he was watching life pass by from behind a glass wall. He didn't want to just analyze the world, he wanted to experience it. And so, in 1980, at just 37 years old, Jim Rogers did the unthinkable. He walked away. He left the Quantum Fund, billions on the horizon, and a seat at the king's table because he realized the wealth he truly craved wasn't sitting in spreadsheets. It was on the other side of the map. That day, Wall Street didn't just lose a brilliant investor, it lost a philosopher in disguise. But Jim Rogers' story was far from over. He was just getting started. When Jim Rogers left the Quantum Fund in 1980, people in the financial world were stunned. To most, it seemed like insanity. He was walking away from what every Wall Street dreamer craved: money, fame, power. He had it all. But for Jim, that wasn't the dream. That was someone else's finish line. His real dream was about something else entirely: freedom. Jim didn't quit investing, he quit the lifestyle. He wanted to see the world with his own eyes, not just through economic reports and stock tickers. He believed that if you really wanted to understand how the world worked, you couldn't sit behind a desk. You had to go out there, smell the diesel fumes in Mumbai, watch the factories run in Shanghai, talk to farmers in rural Africa, feel the pulse of the planet. So that's exactly what he did. In the years following his exit from the Quantum Fund, Jim Rogers began doing what would eventually define his legacy. More than any hedge fund could, he traveled the world. And not in the comfortable, touristy kind of way. Jim didn't believe in luxury. He believed in grit. He believed in seeing countries not as postcards but as case studies. In 1990, he set out on a journey around the world on a motorcycle. Not a limo. Not a private jet. A motorcycle. He traveled through over 100 countries, covering more than 100,000 miles. The trip earned him a spot in the Guinness Book of World Records, but that wasn't the point. Jim wasn't collecting passport stamps, he was collecting insight. Where others saw traffic, he saw supply chain realities. Where others saw street vendors, he saw the heartbeat of informal economies. Where others saw chaos, Jim saw patterns. Economic ones. Cultural ones. Human ones. It was during these travels that Jim made some of his most insightful predictions, like the rise of China as a global superpower. While the West still viewed China through the lens of Maoist communism, Jim was eating noodles on the streets of Guangzhou and seeing young entrepreneurs hustle in a way that reminded him of America in the early 1900s. He returned from his travels with a vision: the future belongs to the East. He began investing heavily in Asia, particularly in China, at a time when most Western investors were still hesitant. He spoke at conferences, appeared on TV, and wrote books, all while championing the idea that globalization wasn't just a trend, it was a tidal wave, one that American investors couldn't afford to ignore. In his mind, understanding a market meant walking its streets, talking to its people, and living in its rhythm. That was a philosophy no Bloomberg terminal could replicate. When Jim Rogers moved to Singapore in 2007, many on Wall Street thought he'd lost his mind again. After all, America was still the world's economic powerhouse, and Singapore? Just a tiny island nation. But Jim had always seen things others couldn't or wouldn't. He wasn't just looking at GDP numbers. He was watching the tectonic plates of history shift beneath our feet. He understood something many investors still hadn't grasped: the future of wealth creation was moving east. He saw it in the work ethic of young Asians. He saw it in the infrastructure being built from the ground up. He saw it in the appetite for education, discipline, and long-term thinking. Rogers wasn't just betting on a region, he was betting on a mindset. And in his eyes, the West was losing its edge. While Americans obsessed over short-term gains and quarterly earnings, Jim noticed that Asians were saving more, investing longer, and thinking generationally. He wanted his own children to be shaped by that mindset, and so he packed up his life and made the leap. As always, he wasn't chasing comfort. He was chasing truth. He began making major investments in commodities, believing that real, tangible assets would outperform paper money in the long run. His logic was simple: populations were rising, resources were depleting, and money printing in the West was out of control. Gold, oil, agriculture, water. These weren't just investments, they were hedges against a future Jim believed was dangerously out of balance. He launched the Rogers International Commodity Index to allow other investors to follow his lead. He preached diversification not just across asset classes, but across cultures, currencies, and continents. He argued that if you were a 21st century investor thinking only in dollars, you were already behind. In interviews, he didn't sugarcoat his views. He said the U.S. was drowning in debt, that its politicians were short-sighted, and that inflation would erode the savings of the middle class. He warned that education in the West was more about ideology than results. He said what others were afraid to say, and while critics rolled their eyes, more and more of his predictions came true. Then came 2008. While most of Wall Street was caught with their pants down during the financial crisis, Jim Rogers had already prepared. He had warned about the housing bubble. He had predicted the fall of major financial institutions. He had told everyone that when you build an economy on cheap debt, eventually that bill comes due. When Lehman Brothers collapsed, Jim didn't celebrate. He wasn't a doomsayer for fun. He simply believed that economic systems, like human bodies, needed detoxing now and then. You couldn't just patch over problems with bailouts. That was like giving sugar to a diabetic. In the aftermath of the crash, people started listening more carefully. Jim became a go-to voice on TV, podcasts, and at investment summits. He spoke with clarity, with conviction, and in the aftermath of the crash, people started listening more carefully. Jim became a go-to voice on TV, podcasts, and at investment summits. He spoke with clarity, with conviction, and most importantly, with independence. He wasn't selling anything. He wasn't running a fund. He had no boss, no shareholders to please. That's what made his voice so rare. Even as he aged, his mind remained sharp, his vision clearer than ever. He didn't chase the hype. He didn't ride the meme stock wave or the crypto craze without asking the hard questions first. His core philosophy never changed. Do your homework. Think independently. Go where the opportunity is, even if it scares you. In many ways, Jim Rogers wasn't just an investor. He was a philosopher who happened to speak in financial terms. But make no mistake, he made fortunes. Not just with trades, but with timing. And he knew when to enter a market and when to walk away, just like he did with the quantum fund. As Jim Rogers settled into life in Singapore, he continued doing what he did best, studying the world, not from a distance, but up close. He watched as countries rose and fell, as industries boomed and busted. But unlike most investors who followed the crowd, Jim was always asking one key question: what happens next? That one question had served him since the quantum fund days. And now, with decades of perspective under his belt, it became his mantra. He noticed patterns that others missed. When central banks in the West kept printing money, inflating assets, and distorting markets, Jim didn't just shrug it off, he called it dangerous. While others cheered the rise in stock prices, he looked deeper and warned, this is not real growth. This is artificial. He believed that governments had created a false sense of prosperity. To him, real economic strength came from production, savings, investment, and long-term vision, not stimulus checks and 0% interest rates. He also kept reminding young investors of one brutal truth: bear markets are part of the cycle. There will be another bear market in your lifetime, he'd say, and it's going to be the worst you've ever seen. To many, that sounded like fear-mongering. But to those who'd read his books, followed his journey, and listened closely, it was simply the voice of experience. Jim Rogers had lived through crashes, bubbles, and wars. He didn't just study history, he'd invested through it. He warned that America's debt-fueled consumption model was unsustainable. He questioned the long-term impact of student loans, rising healthcare costs, and over-reliance on imports. And most controversially, he suggested that while the 20th century had belonged to the US, the 21st might belong to China. That didn't mean he hated America. On the contrary, he loved America. He just didn't let patriotism cloud his investment logic. He once said, "I'm an American. My family fought in every American war. But that doesn't mean I should invest in a declining empire blindly." He believed the truth, not emotion, should guide your investment decisions. And while Wall Street often celebrated high-risk traders and adrenaline junkies, Jim Rogers lived by a different creed: patience. He'd rather wait 5 years for a perfect opportunity than rush into 5 bad ones. He once told a crowd of young investors, "The way to get rich is to sit on your hands and do nothing. Wait until there's money just lying in the corner and then go pick it up." That idea of doing nothing was radical in a world obsessed with action. But that's what made him so different. Rogers didn't measure wealth in quick gains. He measured it in freedom. The freedom to think, to move, to live life on his own terms. And maybe that's why his decision to walk away from the quantum fund still resonates to this day. Because in an age where people measure success by how much you make, Jim Rogers became a legend for what he walked away from. He didn't just leave billions on the table, he left the rat race. The constant meetings, the pressure, the stress. He traded it for open roads, foreign landscapes, and real-world wisdom. And along the way, he became the ultimate example of what it means to be wealthy in the fullest sense of the word. The world loves a winner. And in the financial world, winners are often those with the biggest portfolios, the flashiest headlines, the fastest trades. But Jim Rogers redefined that idea entirely. He showed that sometimes the boldest, most profitable move isn't what you chase. It's what you leave behind. In the decades following his exit from the quantum fund, Jim's career looked nothing like the high-octane, boardroom-driven life of his peers. He didn't manage a billion-dollar hedge fund anymore. He didn't ring the NYSE bell or appear in glossy magazine spreads with luxury cars. What he did was far more profound. He became an oracle of real-world investing. From small villages in Cambodia to back roads in South America, from dusty highways in Africa to bustling cities in China, Jim was constantly in motion. But not chaotically, with purpose. He raised his 2 daughters in Singapore, taught them Mandarin, and instilled in them the values of critical thinking and global awareness. He wanted them to understand the world not just through textbooks but through lived experience. He didn't just preach globalization, he lived it. And while the financial world morphed into an AI-driven, algorithm-fueled machine, Jim's style remained stubbornly human. He trusted instinct, history, and boots-on-the-ground research more than data sheets. He didn't rely on trending Twitter feeds or Wall Street whisperers. He relied on what he could see. That clarity is what made him so unique. Even late into his career, Rogers kept challenging investors to think differently. He warned that bubbles weren't just financial, they could be intellectual. If everyone was saying the same thing, it was probably time to get out. Herd mentality, he believed, was the death of wealth. He taught audiences around the world that diversity wasn't just about stocks. It was about perspectives. And when asked if he ever regretted walking away from the quantum fund, his answer was always the same: not for a second. Why? Because to Jim Rogers, success wasn't about sitting atop a mountain of money. It was about control, about freedom, about curiosity. He had already proven he could make money. What he really wanted was to understand the world and live life on his terms. And in that, he succeeded beyond any Wall Street benchmark. He once said, "The most important thing you can do is to figure out what you love, and then find a way to get paid to do it. And if you can't get paid for it, do it anyway. Because that's where your soul lives." That's what made Jim Rogers a legend, not just for his financial genius, but for his unshakable commitment to authenticity. He didn't play by the rules. He didn't chase trends. He walked away from the noise and into the world. And he built a life that was rich not just in dollars, but in stories, in wisdom, in perspective. His journey stands as a challenge to every investor and dreamer listening. What would you walk away from to live a life that's truly your own? Because in the end, the day Jim Rogers walked away from a billion-dollar empire wasn't the end of a career. It was the beginning of a life, one of the most extraordinary investment journeys the world has ever seen. And the greatest return he ever got was freedom.